Hello and welcome back to Live from Paris. It's time now for business news, and joining me for that is Matthew Warren from our business desk. Hello, William.
Hello again, Lorna.
Sorry. Now, Greece has got some more work to do on its budget, as we've been discussing. But it looks as if the deal with its creditors has been done, even if the bailout money isn't going to be released.
Yes, now we've been focusing, as you said, this morning on the cuts that Greece needs to make in its budget. Of course, the other side of the whole equation in getting the debt down is this deal with private bondholders. We can actually take a look at who holds these private bonds in Greece, and the objective here is to get the bondholders to take this famous haircut. It's about 70% they're looking for, which would wipe about 100 billion euros off their debt pile of 350. There they all are. Now, it sounds like things are going well. The EU Economic and Monetary Affairs Commissioner Olli Rehn has said that the deal is practically finalised. Now, you can see at the bottom of that graphic there, ECB, they hold 55 billion euros of bonds. There's a big question now over, will they be taking a bit of a loss as well? Will they be joining in to help out this whole deal? The president of the ECB, Mario Draghi, was saying yesterday that he didn't want to take a loss, but he might be prepared to just not take all of the profits that are owed to them. So looks a bit positive.
Okay, and there's quite a rush to get this sorted, isn't there? Why is that?
Yeah, there's a rush to get this done now. We keep talking about this date of the 20th of March when 14.5 billion euros has to be repaid. Now, that sounds quite a way off. Why is it such a rush? Well, many things have to happen. Firstly, there's a need to get this deal, if it's done, it needs to be opened up to all of the bondholders, and they'll need a bit of time just to make sure that they're going to accept it. Greece also needs to pass some legislation if it wants to force any bondholders who don't want to take the deal to take the deal, so they'll be trying to do that. Plus, there are countries like Germany, for example, where they need to get parliamentary approval of the deal. So lots of hoops to go through to get to that 20th of March deadline.
Okay, and the big question now, the markets, how have they been reacting to all this?
Now the markets, overnight in Asia, of course, they knew what was happening and that things weren't going quite so well in Greece. And we can take a look at how markets closed there. They've all closed now. We can see that they were all down, apart from the Shanghai Composite, which managed to stay up. Now, in China, there was news that the trade surplus there has widened. Although exports fell, imports fell more. Trade surplus widened. That might have had a positive effect there. But let's take a look at Europe. European markets have opened up. Let's see the judgment that they're passing on what's happening in Greece. And as we can see, it's in the negative there. And I can tell you, although it hasn't popped up on the screen, the FTSE's also down. Last time I looked, it was about 0.5%, but it was definitely in the red.
We'll have to wait and see how that goes across the course of the day. But in the meantime, while Europe's focusing on Greece, two of the EU's most senior representatives are actually they're in India today.
Yes. Now, the EU has two presidents, of course. It has its Council President, Herman van Rompuy, and it has its Commission President, José Manuel Barroso. They are both in India to meet the Prime Minister of India today. They're talking about trade, and we're going to join our correspondent in New Delhi, Natasha Butler, to find out more about what's going on. Thank you for joining us this morning, Natasha. I'd like to start by saying that the EU and India have been talking about a trade deal for a long time now. What are the chances of a deal being done? And if there is a deal, what's likely to be in it?
Well, both the EU and India have a lot to gain from a free trade deal. India exports more to Europe than elsewhere. Last year, it sold 40 billion euros worth of goods and services. So India certainly wants to be selling a whole lot more. Europe, on the other hand, wants a greater slice of India's growing wealth and expanding consumer class, especially in a time of recession. The problem is the two sides, they can't agree over a range of issues, which is why there's been no deal after 5 years. And we'll have to see whether there'll be a deal this time round. Two big areas of dispute on the table today are cars and visas. The EU, for example, wants India to lower its tariff on European cars, which is actually 10 times higher than Europe's on Indian vehicles, while India wants Europe to relax its visa rules to allow more Indian professionals to work in the EU, especially in the crucial IT sector.
Natasha, it's Lorna Shaddock here in the newsroom. Now, the issue of sanctions against Iran is also going to be on the agenda. So what's the EU hoping to achieve there?
Yes, well, the EU wants India's help to try and convince Iran to abandon its nuclear program and restart talks. The EU's president's been telling Indian media that he's going to raise the issue during today's summit. Now, it could prove a touchy subject, though, because India imports 12% of its oil from Iran, and that's helping to fuel growth here. So New Delhi really has no intention of stopping the flow. In fact, this week, India found ways of paying Iran for its oil, which contours the EU-US sanctions. And later this month, Delhi's actually going to be sending a delegation to Tehran to try and look at increasing Indian exports. So it really does remain to be seen how the EU's request is going to go down here in Delhi.
OK, Natasha Butler in New Delhi, thanks very much for joining us. Time to pick up now on a few more of the day's business stories. French oil company Total posted its best results since 2008 on Friday. The group reported net profits up 16% to just over €12 billion. The increase came despite a slight dip in production of 1%.
And US drinks and snacks company PepsiCo has announced it's cutting around 9,000 jobs worldwide. The news came despite better than expected fourth quarter profits. The job cuts are part of an effort to reduce costs by $3 billion over the next 3 years. The company also said it will focus on its core brands and boost marketing spend by up to $600 million.
Well, we're going to move now to the US because the Eurozone crisis is adding to the domestic worries of a still stuttering economy over there. The US President Barack Obama, for one, knows that a deepening Eurozone crisis could wreak havoc with his re-election plans this year. It's not yet a panic, but Americans are looking nervously over their shoulders towards its most important economic and political partner.
Marlin Steel in Baltimore produces wire baskets and sheet metal products for other manufacturers around the world, a company that is growing fast. Drew Greenblatt oversees exports to 35 different countries.
We're very concerned about the tumult in Europe because what happens is the Europeans are pausing, they're contemplating, they're not buying.
10% of Marlin Steel's exports normally would go to Europe, but that revenue has recently gone down by half. The situation in Europe is a headache for Washington's political players.
The threat to the U.S. economy is clear.
These senators are asking economists what needs to be done to protect the United States from contagion.
Our own economic prospects are at stake because we see Europe, the European zone, slipping into recession, and that could drag us into recession.
The downturn in Europe was at least partly caused by the financial crisis in the United States. Now some here say Europe just isn't moving fast enough.
One of my roles here is to explain how Europe works. My message to the Americans is very simple. Europe is doing its homework. We are beginning to get out of the woods, as they would say here in America.
The visit of Mario Monti, the Italian Prime Minister here in Washington, has as its main subject the Eurozone crisis. That Eurozone crisis is not necessarily on everybody's minds here in the United States, but it certainly is on the minds of political leaders here in Washington.
That's Philip Crowther there. Well, finally, Matthew, the focus this month has been on southern Europe and perhaps a little bit in our bulletins as well. But you've been looking north for some interesting developments there.
Yes, well, as you say, we have been looking south at things, but the northern countries of Europe, not just the EU, but just Europe generally, have been getting together. This is a meeting of prime ministers from 9 countries, Nordic countries, Baltic countries, and they invite the UK along as well. They let them in the club.
Why not?
And what I think is very interesting is it's a very different tone of conversation. These countries were talking about growth. They were talking about jobs, particularly in this summit yesterday, they were talking about jobs for older people and jobs for women as well, getting more women into more senior positions in companies and organizations. And these, of course, are economies that have between them a growth rate of 2% predicted for this year, while the Eurozone is minus 0.5%. So just a very different, you see this division emerging almost between the north and the south and the types of things that they're talking about.
Okay. Very interesting. Thanks very much indeed, Matthew, for that and indeed for all today's business stories. That's it from us for now, but don't go away. Melissa Bell will be here with more after the weather.